What's up YouTube, it's Sankey to make videos on the stock market. Guys, as always, I've got a jam-packed one for you today. But before I get cracking, if you don't already have a Trading 212 account, use my link down below and grab yourself a free share of stock. So if you've been rocking with the channel, you guys know over the weekend I've given you a lot of different places to jump into this week and the strategy to go with it. I want to kick this week off right though by introducing you to a play that I think could 10x by next year. Now they're cheap and they're an EV play. My patrons already know about this one and a lot of them are in it at the moment, and right now this stock is up over 20%. But I want to make sure it's on everybody's radar. Now I'm also going to be covering some taxes at the end of this video due to high demand. Up on screen we have DSG Global, that's ticker symbol DSGT, currently standing at $69. Now the key thing to know with DSG Global is they have two arms to their business. Their first is through their subsidiary called Imperium Motors, and their second is through another subsidiary called Vantage Tag Systems, right? And these are two key revenue drivers for their business. So we're going to kick things off by talking about Imperium Motors first. So Imperium Motors, which is the largest part of DSG's business, sell electric vehicles, but the key thing to note here is they do not manufacture them, right? They have partnerships with 3 manufacturers in China who make their vehicles and ship them over to DSG, who then sell them on to the end consumer. So those 3 manufacturers are Skywell, Janway and Rumble Motors, and they give DSG access to a full portfolio of electric vehicles, from buses to trucks to passenger cars to motorbikes and scooters also. Now this is a very unique model for an electric vehicle company because we don't normally see this. We normally see the manufacturer being the distributor also. So this could come with a lot of different benefits for DSG. One huge one could be cost savings on R&D, right? We know R&D is a massive expense for electric vehicle car companies. So this should help the margins of DSG going into 2021. So in terms of where the Emporium business is at right now, we know they secured almost 6 million in pre-orders in November, and this accounted for over 1,000 vehicles, and this is set to roll out in Q1 next year. Now this was in November, so I'm pretty confident that number is a lot higher right now. And we know from last week, Imperium Motors actually started to receive shipments from these manufacturers to start distributing them in North America, and they have plans to expand these nationwide. Now they're going to start receiving more and more shipments as we close out this year and head into next year, because there is high demand for these electric vehicles. So their second subsidiary, which is called Vantage Tag Systems, is very different from Imperium Motors, and it should account for about 30% of their business next year. Now what they do is they install fleet management systems, particularly right now at golf courses, and they have a lot of different advantages for these golf course operators, right? One is that there's increased security because through the system the operator is able to switch off these vehicles. The second is that there's more control over fueling and all the analytics behind that, and the third is that there's the tracking of the fleet as well. So there's a lot of different advantages. Now there's a lot of different use cases also for these fleet management systems. They're not just restricted to the golf courses. They're looking to expand and get more business at the military side, in government, as well as agriculture, right? So there's huge opportunity here for Vantage Tag Systems. So there's a couple of things I want to highlight from their Q3 results. Now bear in mind that Emporium Motors business isn't factored into these results. Their revenue is up 170% to just over 300,000. So this growth rate is fantastic in their Vantage Tag Systems business. And also I want to highlight their gross profit of 50%, right? That margin is fantastic. That is a very high margin. And this indicates to me that this could be a profitable business in no time. Now their net loss of 3 million is down from 5 million the quarter last year. So the business is moving in the right direction, and these are good financials. And once they start integrating the financials next year from Imperium Motors, it's going to be a game changer for this business. Now I think 2021 is going to be an explosive year for DSG for a number of reasons. One is that they've only just started selling vehicles within the last month, right? They've only just got their dealer license to sell in California and nationwide. So once they start rolling out their vehicles to all of their distribution partners, which stands at over 58 at the moment, you're going to start seeing a lot of orders ramping up, and that is really going to boost that business and boost that share price. The second, guys, is that this stock has fantastic press coverage. Every move, every step they make forward is noted down in a press release, right? And this is just getting investors excited and just pushing that share price up further. Another is that they're currently listed on the OTC, and it wouldn't surprise me if they have plans in the very near future to uplist to the Nasdaq. Now, we saw what happened to the Alpine 4 Technologies stock when they announced that they're going to uplist to the Nasdaq, right? That stock price absolutely exploded because there's a lot of different benefits that uplisting can give a company. So as I said, it wouldn't surprise me if it's on their radar and it's something that they're planning, and when they do, we could see a big share price increase, right? Remember, it gives them access to a lot more capital, it makes them a lot more liquid and a lot more attractive for potential investors. Now, management are very confident that Imperial Motors can generate at least $40 million in revenue next year, and Vantage Tag Systems can generate at least $20 million. This gives them 2021 revenue of $60 million. Guys, we have to remember, this is a company that is currently $50 million in market cap. This makes them an extremely cheap stock on those revenue numbers, right? We do not see electric vehicle companies with a price to sales of around 1 times. This is why I think this share price can really be driven up next year, right? And it wouldn't surprise me if we see this company with a price to sales of somewhere around 8 to 10 times. This would give them a market cap of $500 million and a share price of somewhere in the region of $6 to $7, guys. This is why this could be a 10x opportunity, right? So if you haven't already, I want all of us to grab a position in DSG Global. 2021 is going to be their year. They've got so much room to grow, and the management is just laying the foundations for that to happen. And we're going to add this to the long list of home runs that we've got over in this channel. To name a few, we've got Alpine 4 Technologies, we've got Marathon Payton Group, and we've got Gevo. And DSG Global is just going to be another one on our list. Now, in terms of entry point, guys, the share price is running up pretty fast. So if we can get in under 1, this is a good entry point. Now, do bear in mind, just because of the low price and the stage that the company is at in the moment, you might experience some volatility. This share price could drop 10-15% in the day. But going into 2021, you've got to remember, management are set that they can achieve 60 million in sales, right? And this, if they do achieve 60 million in sales, you're going to see an explosion in that share price over 2021, well past $1. Like I said, I do think this company can hit $6 or $7 next year. So grab your positions, load up, and we'll get ready for the home run. All right, guys, so it's question of the day time. Now, this question comes from Darren, big support of the channel, so shout out to you, man. The question is, if I sell my stock in my 212 ISA account, will this count towards my capital gains allowance? I'm not sure how it all works. A video would be appreciated. So thank you very much for sending in that question, guys. If you have any questions or comments, leave them down below for me. So this question is related to UK taxes on selling stocks. So for my US audience, I'm going to do another video on US taxes later in another video today. So when it comes to investing in stocks in the UK, there's 2 ways you can do it, one with an ISA and one without an ISA. Now, when you invest in stocks with an ISA, you have a tax wrapper around your investment. So that means you pay no taxes at all, and this doesn't come out of your capital gains allowance. The only thing to note when investing in stocks through an ISA is that you can only invest £20,000 a year, no more than that. Otherwise, you lose that tax advantage. And if you're following the journey on this channel, it won't be long before you're investing more than $20,000 a year, which means you have to switch over and invest without an ISA. Now, this is where it gets a little bit more complicated, so stay with me on this one. When you invest in stocks without an ISA, you have to pay capital gains tax on profits above £12,300 because the £12,300 is your capital gains allowance. So if I give you an example, if you invest in stocks and your profit is £13,000, then you only pay tax on £700. Now, the amount of tax that you pay on that £700 depends on what tax bracket you're in. I'm going to give you 2 examples, right? So if you are a higher rate taxpayer, that means you earn more than £37,500 a year. You will pay 20% on that 700, meaning that your tax for that profit will be £140. Now, if you're not a higher rate taxpayer, so you're a basic taxpayer, meaning you earn less than £37,500, you would pay 10% on that £700, meaning your tax bill would be £70. Now, this only applies if your take-home income, let's just assume it's £20,000, plus your taxable capital gains, remember, is £700. So that's £20,700 is less than the higher rate tax bracket, which is £37,500. Now, if your taxable income plus your taxable capital gains is greater than £37,500, pushing you into the higher tax bracket, that means you would have to then pay 20% on your taxable capital gains, which is $700. So it's pretty simple to get your head around. just watch this over a couple of times just to make sure it's, embedded in your mind and you know exactly how much tax you have to pay, because it is important, as we go into next year and the year after. If some of you are looking to exit some of your positions, and I know, guys, we make a lot of money over here, so some of you might be pushed over your capital gains allowance of 12,300. So it's definitely worth noting and making sure that you know correctly. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button. I post each and every day. Guys, I said weeks ago, we're gonna finish off 2020 with a bang, and that's exactly what we have done, because that's how we mean to start 2021 and continue. So if you've been rocking with the channel, you know our plays have been blowing up the last couple of weeks. That's exactly how we're gonna continue next year. So I look forward to continually sharing this journey with you guys, because it's amazing. And as I always say, do check into the channel each and every day. The stock market is rapidly moving and you never want to miss a beat. So I'll catch you guys on the next one.